What do you make of this two-day slide? Has your rating, your price target on Apple, has it changed since that earnings report?
Yes. So I have a neutral rating, and I actually lowered my price target to 180 from 185 after the company reported its June quarter. So I think that the pullback is appropriate, and I would actually look for even a larger pullback before getting excited about the stock. The good news, though, is there's two natural catalysts coming ahead. The launch of the iPhone 15, which is expected in mid-September, and then the Vision Pro launch, which is expected in early calendar 24. So I do think that there are some near-term catalysts for the stock that could help the stock rebound.
All right, so Tom, I got to ask you, you say there are some near-term catalysts. Your price target's at 180. The stock's trading almost at 180 right now, at about 178. So you don't see much more upside for this company.
Correct. So going back to my downgrade, what we thought was that shares had a huge run. It was trading at or near not just 52-week highs, but all-time highs. They were trading at premium multiples, which they still are on a PE basis and other valuation metrics. And we thought that, there's structural challenges with even Apple making augmented reality and vision AR, VR headsets that are mainstream.
Okay.
So it's come back, but I think that, before I would get excited, I'd actually want more of a pullback.
All right, we're looking at the chart since earnings. You can see a very steep decline. So I want to get into that report. So significant declines in Apple's hardware business. iPhones down 2%, Macs down 7%, iPads down 20%, but services up 8%. That's certainly a higher margin business. Which side of this gives us more insight about the future of Apple going forward?
The 8% increase in services revenue. So as you pointed out, every major category of hardware was down, but services was up. I am bullish longer term that Apple as a service is a real opportunity to the extent that they could charge a consumer, say, $200 a month. For the $200 a month, they get the latest, greatest hardware, including the iPhone. They get a long list of services, including Apple Music. And then Apple essentially could charge $2,000 for the iPhone, but consumers wouldn't know. They're just paying the monthly bill. So I do think that, this Apple as a service or having more services in the future bodes well for the long term for the company and for the stock.
So let me ask you, is launching a new iPhone, is that a tailwind for the services, or are the services the tailwind for the new iPhone? Because, we're at iPhone 15 now. It doesn't seem like there's a lot more innovation really left. I mean, at one point, the innovation was the camera. Before that, it was FaceTime. What's left that really is going to bring in consumers who are, generally pretty stretched?
Yes. So to the extent that Apple gets more Android users to switch over to their devices, that's where the services tailwind kicks in. So basically increasing their installed base. But you pointed out aptly that there haven't been a lot of major innovations, being able to shoot like a movie camera or SOS, some of these other things. They're really minor features. What's really benefited Apple the last couple of years is the subsidies from the carriers as they're trying to get more consumers on their 5G networks where they invested billions of dollars. I think that, that's where I guess new products come into play, like Vision Pro, to the extent that they can get incremental revenue there. Maybe they'll wildly outperform against our expectations. We'll see.
All right, what about China? China was actually kind of a bright spot in this report, but in general, we're seeing some very disappointing data coming out of China. We're hearing that consumers are not willing to spend. What's the longer-term outlook for China as the company tries to gain market share there and also shifts more of its business to India?
China was a bright spot, and you hinted there, India was also a bright spot. So they had better than expected results in China, strong results in emerging markets, including India. I do think that long-term, India could be a catalyst for the stock. On a near-term basis, I was concerned that investors got ahead of themselves as far as their expectations. I think what could success in India look like? You look at China at about 10% of sales and a major component in the supply chain. But I don't believe in and of itself that China can serve as enough of a sales catalyst on the next 12 to 18 months to want to buy shares for China.